one major, we call them wirehouses, like Morgan Stanley, UBS, Wells Fargo, Bank of America, Merrill Lynch, not one has put Bitcoin on its platform yet, a Bitcoin ETF. They're all doing their due diligence. And I think what's going to happen is within the next few months, one will, and it may be not the big ones, it may be an independent RIA like LPL. They tend to move a little more quickly. Once you get one with a spot Bitcoin ETF on its platform, the others will fall in line pretty quickly.
Cathie Wood is the founder, CEO, and CIO of Florida-based investment management firm ARK Invest, which manages several actively managed exchange-traded funds based on disruptive technologies like blockchain, robotics, artificial intelligence, energy storage, and gene editing. Earlier this year, the U.S. Securities and Exchange Commission approved the firm's ARKB Spot Bitcoin ETF in collaboration with 21 shares. The approved U.S. Spot Bitcoin ETFs have been the focus of the entire industry all year, as they have broken and made several records for exchange-traded funds globally. According to recent reports, the ETFs recorded 3 consecutive days of inflows on Tuesday after days of massive outflows. With Tuesday's gains, the US spot Bitcoin ETFs have reached $15.27 billion in total net inflows. BlackRock's IBIT, which captured $121.03 million on Tuesday, now holds 312,565 Bitcoin, valued at $18.26 billion at current prices. In a recent discussion with Peter Diamandis, Cathie discusses her outlook on the ETFs going forward, denouncing the rapidly spreading pessimism about their recent performance and the ongoing crypto bull market. Cathie believes we are about halfway through the 2024 and 2025 cryptocurrency bull market, and possibly only weeks away from certain events that would see Bitcoin and other cryptocurrencies hit crazy new highs. The first is 1 or 2 major national wirehouses like Morgan Stanley and UBS listing the Bitcoin ETFs. Cathie firmly believes this will happen before the end of 2024, and it will have an instantaneous impact on Bitcoin's price. Cathie's timeline aligns with estimates from analysts at Bernstein Research, a research and brokerage firm. In a research note sent out to clients in June, the analysts predicted that major wirehouses and large private bank platforms are on the cusp of approving the spot Bitcoin ETFs to be listed on their platforms. When this happens, sometime between Q3 and Q4 this year, Bernstein analysts expect renewed interest in the ETFs and massive price upsides for Bitcoin and other cryptocurrencies. During her interview with Diamandis, Cathie also discusses her $1 million price prediction for Bitcoin and the next phase for the ETFs. As we bring you clips from the discussion, please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. Thank you and enjoy the video.
We have 4 people at ARK who are working on crypto generally, one dedicated to Bitcoin on-chain analytics. And judging by those, we believe, halfway through this bull market. And halfway doesn't mean we're halfway through the price increase because, at the end of a bull market, prices tend to go parabolic. So we have no idea where that, but we feel very strongly just based on-chain analytics, looking at them versus the short 10-year history, a little bit more than that history, that we're halfway through the bull market. What's very interesting, since the ETFs were launched in January, many people think, all right, the boom, and we've had a very nice showing, David versus Goliath. We're in the fight, and very happy where we are. Yeah. But not one major, what we call them wirehouses, like Morgan Stanley, UBS, Wells Fargo, Bank of America, Merrill Lynch, not one has put Bitcoin on its platform yet.
Cathie, when you were on stage with me at Abundance 360 last, you were saying you saw $1 million per coin price. Are you still there?
Yes.
By 2030?
Yes, 2030. So our bull case. Bull is over 1.5 million. Our base is in the $650,000 range, so about tenfold from here by 2030. And there are three big building blocks. Institutional is one, and I would put it sounds like retail distribution, but these are institutional decision makers at B of A, Merrill Lynch, and so forth. The second is this is a replacement for gold. So we assume that it's going to subsume 50% of the gold, what would be the gold market, especially as younger people are looking to diversify. And then it is an insurance policy. In emerging markets, I just visited El Salvador and had the pleasure of meeting the top officials there, and they are blazing a trail, making it legal tender, and giving their populations or showing the way for other countries to give their.
What a brilliant move!
Yes, it is a brilliant. There are two.
What a brilliant move!
President Bukele is going after two big ideas, and we're talking about them: AI and Bitcoin. And my mentor and friend, Art Laffer, who joined me on this trip, I think is going to be working with that government. It's only a $30 billion economy. Can you believe that?
Wow.
And here
that's
we're
crazy.
talking, and they're being very progressive. They're putting in tax policies that are going to encourage innovation. So I think that's a very big idea.
Yeah.
Argentina is moving in this direction. We've talked to the economics ministers there. They're not ready to go the Bitcoin route in the way that President Bukele is, but they're moving in that direction. They're thinking about it. And then the other insurance policy is for anyone, and in high net worth individuals, but anyone, as a protection against confiscation of wealth, whether that's inflation or outright confiscation because of corruption.
Despite their popularity with investors and record-breaking success, advisors and wealth managers are still not completely welcoming or receptive to cryptocurrency-based ETFs. According to recent reports from Cerulli Associates, only 2.6% of advisors recommend cryptocurrency to their clients, while another 12.1% will use or discuss it at the client's discretion. BlackRock's Chief Investment Officer of ETF and Index Investments, Samara Cohen, also recently revealed that roughly 80% of the inflows into the spot Bitcoin ETFs have come from self-directed investors using online brokerages. Experts believe this will change later this year when wirehouses finish their due diligence and begin listing the products. During a recent interview, Bloomberg Intelligence ETF analyst James Seyfarth said, "Many of the largest wealth platforms, wirehouses, and advisor networks haven't fully approved the Bitcoin ETFs. In most cases, the only way those advisors or brokers are currently allowed to buy a Bitcoin ETF for their clients is after a client specifically requests it." James added that he expects the situation to change significantly by the end of the year, allowing more advisors to offer spot Bitcoin ETFs to the clients. Cathie agrees with this, stressing that the first announcement is expected between now and October, representing 6 to 9 months after the products started trading in January. Here are more clips from the interview.
Yeah, we tend not to do 1 year, but if we're in the middle of the bull market, I think the next spur is going to be the platforms putting the spot Bitcoin ETF on it. So, and I do think that will happen this year. We were told by some of our prospective clients, the platforms themselves, that they would need 6 to 9 months to evaluate it. So here we are entering the 6th month. So I would expect in the fall, one or more will put the spot Bitcoin ETF, or many of them, on their platforms. And I think that will be the next swoosh then. I think it was the last halving. Many people, we went through the halving and everybody waited for a pop. And it didn't happen. Well, first of all, it didn't happen because there's a lot of anticipatory buying into it. But I've watched it kind of, gestate, shall we say, and then all of a sudden. So those two could coincide in the 4th quarter of this year. It could be pretty exciting. And someone like Art Laffer, who he couldn't be more excited about Bitcoin, because for him, he really believes that, the Fed, many people feel that they have managed monetary policy over the years. So, we've prevented terrible things from happening. If you look what happened before the Fed came about in 1913, what happened then is prices were stable. We're on the gold standard. And the economy was very volatile, and you ran into booms and busts, but they were very quick. They were over in weeks. We lead up for years to a crash. In 0809, poster child for that. And here we are again. We had zero interest rates. And, I wonder what the fallout from private equity, private credit, putting enormous sums into real estate and then leveraging it up. We're starting to see the fallout, even in the areas where there's been large in-migration. So the Sun Belt, we're beginning to see multifamily in excess. So, we'll continue to see, crises, I think. Hopefully nothing like 0809. I don't think so, but still, 0% for a very long period of time leads to reaching for yield, which leads to bad behavior.
Cathie expects some more tumultuous periods ahead for the US economy in 2024, which she predicts will lead to surprisingly large Fed rate cuts later this year. While speaking at a forum in Hong Kong last month, she said, "We think we're going to see surprisingly large rate cuts this year. We think the rolling recession that has been sweeping through the US and is hidden underneath headline statistics is going to drive rates down." In last month's edition of her monthly In the Know broadcast, Cathie also shared crucial economic indicators and market signals, which, according to her, are indicative of turbulent periods ahead for the US economy and the markets. One indicator Cathie was particularly concerned about is the growing number of bankruptcies and retail closures. This is a significant development, as thousands of brick-and-mortar retail and dining establishments have been shut down across the United States in recent months due to several factors, including inflation, stagnant wages, and higher borrowing costs. She also discussed the crisis sweeping through the commercial real estate industry, and how, if it progresses further, it could negatively impact the U.S. banking industry. For Cathie, the only way forward is for the Federal Reserve to come to the rescue by significantly lowering rates and resuming quantitative easing. Please share your thoughts on Cathie's interview and her predictions for Bitcoin, spot Bitcoin ETFs, and the overall US economy in 2024 and beyond. If you liked this video, then ensure you check out our other videos, give this video a thumbs up, and subscribe to the channel for more videos like this. We appreciate the support and thank you for watching our videos. See you in the next one.